Hello everyone, welcome to Elliottwave.com YouTube channel. This is Henry. Today is Wednesday, April 22nd. The time is 3 a.m. GMT. So for today, we will be looking at the chart of BAC. This is Bank of America, 45 minutes chart, and we can see right here the rally to 25.35 ended with 4. Okay, so that means it is still within an impulsive move on the downside, in which this bounce to 25.35 ended with 4. So now the stock is proposed to have resumed the downside with the arrow turning down. Okay, turning down arrow, and since wave 5 is in progress right now, we can see the subdivision is also in a 5 waves. We have this wave 1 right here. This is wave 1 of 5, and this is your wave 2 of 5. And so now, as long as we stay below 25.35, we could expect BAC to continue to extend to the downside. Okay, so we got a couple of different possibilities. As always, understanding the sequence, understanding the overall structure allows us to understand the sort of the best way to be able to trade, right? So in this case, for example, technically, if we are talking about only a short term here, unless we break below 1 in red, unless we do that, which we have not, you can do a double zigzag or double 3 like this in the wave 2. So technically that is a possibility until we break below wave 1. Now what other possibilities are there? Well, you could see that this 25.35, it has a turning down arrow. It's not a red arrow. You can see right here in the box, we prefer to trade only in the direction of the green and red. Red is usually seeing a down arrow. This is only turning down, which is a black color, right? Right side text. So we prefer to trade only in the direction of the green or red right side text, entering at blue boxes, and we don't like trading turning up or turning down arrow or against the direction of the right side text. So this one is turning down arrow. So let me zoom out to give us a better idea on the BAC. So remember, this is a wave 4 here at $25.35. So when I zoom out now, of course, this is not a full count. If you want to have a full count or in all time frames, you can always try our service. We have 14 days free trial, and the link is provided in the description of the video below. So you can see right here, this is the wave 4 in blue that we saw earlier in the 1 hour chart. Wave 4 in blue. Now if we zoom out, we get a better and a larger degree view. So this is your wave 4 in blue, right? And so you see that this has to be a wave 3. If that's the case, we have an ABC, which is a perfect 3 swings, and also at the equal leg area. So this is telling us that this rally is corrective, because it's only 3 swings and it's only at the 100%. No extension that you normally will see in a 5 waves, like a 1, 2, 3, 4, 5. No extension to the 161.8. In this case, it's perfect 3 waves clearly, and ending at the 100% more or less. So we can sort of conclude, just based on this observation, that BAC is not really it is still sort of the momentum, the primary trend remains bearish, right? Because if it is bullish, you shouldn't be expecting a 3 bounce and pulling back like this, because this is clearly corrective structure. It's only 3 waves. Now continuing the idea, we can see that the sell-off, and this is the COVID-19 sort of sell-off here. All right. Now remember, not every single stock is different. I mean, not every single stock is the same. And the high-tech stocks obviously are better, like Amazon and so on, and also even the indices are better in terms of the performance. Now the financial stocks is quite known to be really underperforming in this entire time, right? Because of the low interest rate, one of the factors there around the world. Now you can see this decline from January 15, we can count this as a 1 2 with a very clear extension, very clear impulsive move. That should be your wave 3 right here, and this can be your wave 4. Now based on this structure here, we can see a 1 2 and then 3 with a very clear extension. So we can conclude that overall, I think there is still a possibility that we have more downside to finish a wave 5. Now what else can be in the possibility? Well, a couple of different possibilities. For example, we could have ended 3, 4 and 5 here, so we could have ended the 5 ways here, which is another possibility. Okay, but assuming, okay, let's assume for the time being whether we are still, you know, looking for it to extend lower in the wave 5, or whether we have ended this entire move, okay, which is another possibility. So let's talk about all the other possibilities. So assuming, okay, let's assuming for a moment this is ending. So that still leaves us with this conclusion that you got a 5 ways down and you got 3 ways up. So still the same conclusion that most likely you're gonna get another leg lower. So I think the key here, you know, whether we end the wave 5 or not, the key here is that we only see a 3 waves from this low, which is a corrective pattern, right? A corrective sequence. It's a clear corrective pattern, only 3 waves, 100%, and then reacting from that area. So that is telling us that regardless whether this 5 waves is finished, and this is you know, like a P leg, or there's another possibility, this is a W of P, right? Whether that is the case or not, we can conclude right here that this is merely a correction. Okay, so like I've been saying, there is a possibility. Now if this is really a wave 4, not a wave P, for example, a wave 4, you can get another push lower to finish wave 5, and then after that you will finish the cycle as a 5 wave and you get a bigger bounce, right? Now this wave 4 is going to be confirmed that this is really completed only after BAC is able to break below wave 3, right? Until it breaks below here, technically what happens is we can do double zigzag or double correction. So we could be doing W here, and you downgrade this into a lower degree label. In that case, this is the lower degree as the subdivision of the red. So if, let's say, if it rallies again, then this can become a double correction or double 3 WXY, something like this, right? And then in that case, it can do another 3 ways up like this. So it could, let's say it could do a 1 2 3 4 5 ending A again here, and this is a B, and another leg higher in C. Alright, so just to give you a couple of different suggestions or possibilities so you understand exactly what we are dealing with here. Just like playing chess, we should be able to know what are all the possible moves and what are the overall conclusion. So the overall conclusion here, like I've been mentioning, is that this is corrective. That's the overall conclusion. Therefore, we can expect more downside, and the downside, right? The bias on the downside is going to be the main theme for the BAC. So we can expect eventually it can break below this one again, unless this is some sort of 1-2-1-2 a nest. But you know, until it proves it that way, I wouldn't entertain the idea of 1-2-1-2, right? So this could be happening unless we break below wave 3. Now of course, if it does a double like this, this cannot be a wave 4 anymore, right? If this is happening like a bigger you know, a bigger 3 swings like this, or some people can count the subdivision and call it 7 swing, 1 2 3 4 5 6 7. So if it happens like this, then obviously it cannot be a wave 4 anymore. It's too big for a wave 4. Now if that happens, suppose that happens, okay, then this, you can count this as a completed wave 5 like this. All right, and then then that means this rally will be in the correction of this decline. Now, even if this were to happen, it doesn't really change the fact that this leg is corrective, right? It doesn't change the fact this leg is corrective. Therefore, even if this happens, right, you should expect still that the rally will find sellers again for the next leg lower, because again the key is this structure is corrective. So therefore, even if it is going to extend, okay, you can adjust the count, but still that still suggests that overall the bias is to the downside. So in that case, if this is rallying again, you can expect it finds sellers at this next 100% extension, and then from here BAC can resume lower again, or at least pulling back in three ways from here. Okay, so that's the idea here in the BAC. Going back to the 1 hour chart, that means it is turning down only because we have not broken below the 3 right here. And so that's the reason why it is only turning down, because it will be confirmed to be bearish in the 1 hour against wave 4 here only when we are able to break below wave 3, right? So the right way though is really not in the 1 hour chart. You can see it's turning down, there's no blue box anywhere. But if you look at the 4 hour, the right way to execute here is actually waiting for the risk bounce and execute it in the blue box here. So if anybody, for example, sold it here, then at this point in time, because you have the reaction lower already from the blue box, right? At this time, that person would have been able to already take partial profit if they want to, already able to move any stop loss to the entry level, therefore creating some sort of what we call risk-free position. Now, I understand the stock is not trading in 24 hours. Sometimes it can cap up, you know, when they report good earnings or bad earnings can cap down. So that's one of the problems with the stock, because it's not for 24 hours. But we also cover Forex, which is 24 hours. Now, in that case, I think moving stop loss is pretty much going to protect you, because it's not going to cap up or cap down. So it will always be going up. Like for example, if it rallies again from here, it is going to hit your stop loss and you can get out without any harm. Now, stock is a little bit different. I understand that stock sometimes can cap up because of good earnings. For example, it can open immediately here. Now, in that case, it's kind of a bit difficult to control the risk precisely, because the possibility of capping up, capping down. But still, though, it is a 3 swings. This, if anybody wants to execute, it would have been in the blue box here, and at that point you would have been able to create risk-free position. Now, after we reacted lower from the blue box, then there is really nothing visible until we break below wave 3 again. Technically, you still can do double, and if you do double, then you have to adjust the count, calling this completed 3, 4, 5, and then this is the correction. If that's the case, this is going to be in the correction, because if you do another leg higher, it's too big to be a wave 4. So if it does another leg higher again, then this is going to be in the correction of this 5 ways down. But even so, the entire structure still is a corrective pattern, because your first leg is only a 3 waves. Alright, so I hope you understand all these different possibilities, and also the way to think about the market. Right, that's the way to think about the market. Understanding alternates always helps a lot in terms of trying to give us an edge, in terms of trying to give us an idea whether something is high probability or not. Now remember, because of the various possibilities of path in the Elliott wave, there are certain circumstances in which it is higher probability for you to take the trades. So people who study Elliott wave, right, they cannot just look at the 1 hour chart and start trading every single thing they see. They need to understand all these things that I explained here, so that they can be better in terms of choosing what to trade, what not to trade, and where to trade, right? So if you enjoyed this video, please do like and subscribe, and I'll see you all again tomorrow. Okay, have a nice day to you all.